Hello and welcome to another update video about ADA. On the ADA chart, we continue to track sideways price action in this wave 4 triangle, which could result in another bear market low. That's at the moment the expectation, unless price can break above 38 cents and invalidate this Elliott wave triangle. Well, it wouldn't really invalidate it, but it would cause us to favor the more direct bullish breakout scenario. However, we're quite far away from that, and the price would need to do a lot to give us more evidence that the yellow, more bullish wave count is playing out. Until then, we focus here on the Elliott wave triangle, and so far price is adhering to that one nicely. We're now in the support, you could say support cluster area, support range for this D wave of the triangle, and we are looking for a move up in an E wave shortly, maybe already started, so that let us zoom in. In a triangle, we have 5 waves, A, B, C, D, E, and the E wave is typically the last wave of the triangle, and you would expect a break to the opposite side of the E wave to complete the triangle and to, well, get a breakout into the opposite direction, really, for a new bear market low. Minimum expectation for that bear market low would be a break below 22 cents, but it should go quite a bit lower in an ideal world. We can only really give you a key target for that once we have a confirmed completion in place, well, yeah, an endpoint in place for wave E of wave 4, because I can only calculate the wave 5 target once I have an end in place for wave 4. So looking at this now, we obviously came down in this ABC structure to the downside, was an ending diagonal. You can subdivide that differently here, and the possibility is now that an E wave rally has started. We certainly have enough waves to the downside. But on the flip side, I haven't got strong evidence yet. It was a very dynamic market yesterday, or it's still very dynamic, right? I mean, at the moment, you can see a nice reversal candle. It actually reacted to that 25.3 cent level. We talked about that already weeks ago. So it's good to see that that had some relevance. This broader area was the area where overall the D wave should ideally finish based on probabilities. We were then able to refine that target to that 25.3 cent level, at least as a level of interest. You can see that while we broke it briefly, the 4-hour candle did not close below that level. The 1-hour candle came briefly below it and moved up directly. So it was quite a swift reaction to that relevant Fibonacci level, which is quite good to see. Now, we need to understand what is the first signal really that we're already turning around. Now, if you use candlesticks, you might see that as a reversal signal. There is a first early indication, yes. And if we're already in the E wave of the triangle, price should get into the region around 30 and 33.7 cents, even though I feel it's a bit early to confirm that really. And bear in mind, it would only be a corrective rally that would occur. And what we need to understand is, yeah, what is the first strong indication that the D wave has bottomed? Now, due to the dynamic nature of the market and the strong drop yesterday, it would take quite a bit to confirm that actually. So what we want is a rally above yesterday's high, or at least the candle where the volume started. That was here. So we even go above that high. So 27.5 cents. I think it would take a sustained break above that level to confirm that the low is in place. Until then, I would cautiously focus on higher against yesterday's low and watch if that is unfolding now, but I have no evidence for it. Okay, so it would just be an educated guess because we reacted to the 25.3 cent level. So that's not really anything that's very helpful. Either way, I'm not really seeing anything here as a very reliable trade setup anyway. I'm purely tracking those movements to give you a best idea of where price might be heading and when the trend is shifting. At the moment, the trend is where we want it. It's basically a sideways range, and it should go up once more in an E wave before it comes down. Alternatively, of course, it could go more directly to the downside because we're still waiting for one more low. And I would not trade the E wave to the upside. It is at best a corrective structure. That's just my take on it. If something more bullish evolves, then we should see that as an impulse and a correction down, and it would take a break above 38 cents. So there's a lot of movement still that ADA needs to do to convince us that something more bullish is taking place. But I am focused on higher once more, at least in an E wave, okay? If something more bullish evolves out of this, that's a different question, but we're not there yet. And at the moment, price action, which has been correctively to the upside, correctively to the downside, correctively to the upside, downside, and so on, still suggests that another bear market low is very, very likely. And I'm going to look for it until price can prove that we are already turning around for something more bullish. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.